Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. And we are live. Today we have James Kandasamy, award-winning multifamily apartment real estate investor from Austin, Texas. James, thank you very much for jumping on with us today. How you doing?
Happy to be here, Gabe. I'm doing very well.
Right on, right on. To get us started, why don't you tell everybody, who you are, where you're from, and how you got started in real estate in the first place?
Sure, absolutely. So I'm from Austin, Texas. Started in single family space. We bought like 13 houses, and from 13 houses we moved on to multifamily. Right now we own almost 1,700 units right now in Austin and San Antonio market, and we just do apartment buildings, and we are vertically integrated, which means we have asset management, construction management, and property management all in-house.
Oh, wow. That's super unique. And that's a small jump. You just went from a few multifamily to 1,700 units, which is
it's crazy. Which is crazy, right? So yeah, we've been talking to one tenant to buy one tenant. Now we have managers managing our tenants or residents, I would say.
So take us back to the start. So when did you actually buy those first few units?
This was like almost 2013, right? I think we start buying one by one our single family houses. I mean, I was always on a W-2 job for 22 years. And I think 3 or 4 years ago, I resigned from my job to do this full time. And it's just so fulfilling, right? So the way we got started is, we started with single family. We did like 13 houses, and out of that 13, 2 are flips, and 11 are rentals, right? Where we buy and we rehab and then we refinance. It's a technique called double closing.
The BRRRR strategy.
The BRRRR strategy, absolutely. So as long as you know the term, that is what it is. Yeah, we do the BRRRR strategy. We rent it out, and after 1 or 2 years, we sell it, right? So we almost built up almost 400,000 of equity in our
nice
rentals, and just harder to scale on single family, right? So we said, okay, I'm going to go, bigger. And that's where we started buying our 45 units multifamily. And since then we have done like 9. We went full cycle on the first one. We made like almost 332% in 4 years for our investors.
That is some good IRR right there. That's a great return.
Yeah, absolutely. So I think it's 50% IRR, right? So, and the biggest we have done is 346, almost $30 million deals. And the biggest thing is we are the single GP in all these deals. I mean, we are the only GP, and I have passive investors who come and invest with us, but we are the only guy. We means my wife and I are the only guys.
Wow, that's awesome, especially that it's a family business. And GP, for everybody, that means general partner, which means that they're the only ones that are actually coming to the table buying these things, which is unique. Usually there's a partnership involved. You got multiple parties, and so makes it a little bit easier. I'm sure streamlines the process so you guys can make decisions. during
Yeah.
breakfast?
No, not during breakfast, on the bed at night, right? We just talk to my wife. Hey, did you fire that guy? Did you hire this guy?
I love it. I love it.
Yeah, she runs the property management, the construction side of it. I do the investor relationship and the acquisition side. So yeah, I mean, it's a good and bad thing, right? Being a single GP, right? Bad thing is, sometimes you find it harder to scale. So we are having some employees. We have almost like 40 of our employees working for us, right? 4 to 5 are the corporate level. So we are growing that way. And partnership is nothing bad with that. I mean, I love to partner with people as long as I need to do it. At the same time, as we grow bigger, I have to do that. I mean, in fact, right now I'm on a partnership on a ground up construction of 370 units.
Oh, wow. Okay. So, I mean, there's many different ways that we can take this. It sounds like you guys have some great experience and some unique experience, because you're a husband-wife partnership. And this is the first time I've heard of that on this show. I'm sure it's out there somewhere. So,
Sure.
Let's take this. Let's start first from the perspective of growing. So you started, a lot of people listening and watching, they bought a single family, maybe they've done a flip, they've done a wholesale. They're looking to get into the larger multifamily, larger commercial properties. But they're just not there yet. So kind of tell us, what was your experience going into this once you bought those first 13 single families, and then you went and you decided you're going to do multifamily. You went and you bought that first multifamily property. What was the lessons that kind of jumped out during that process of buying that first multifamily?
Sure. I mean, let me talk about scaling from single family to multifamily, right? So basically, it's all about mindset that you have. I mean, I'm originally from Asia, in Malaysia, which is a small country in Southeast Asia, and coming to the US and working W2 job. I mean, working W2 job is okay for people like me, right? Who's new in the country, because you're just working. But now when you get out of that corporate life, you are on the street talking direct to a seller who's a native here, and it's just hard, right? I mean, who's this guy coming from another country and talking to me
What's
about
that accent?
buying my house? I mean, but I never really think about it until after many years doing this. Hey, how are these people talking to me, a guy from some other country with different accent, and trying to buy my house? But I think I never really thought about all that. I just think that I can get a deal. Someone's going to sell me a deal, and if I do something different from everyone else, I am going to get somewhere, right? And of course, I'm going to work harder than everyone else. So doing different things from everyone else and working harder than everyone else will get you ahead somewhere. And I never had any seller out there who has been here for a very long time who say that I'm not going to sell to you because who are you, right? Nobody does that. Everybody is business friendly. Everybody's open to making a deal, and it is capitalism. And I think as long as you are being nice to people, as long as you're doing good and you're adding value to other people's life and their livelihood, it makes a lot of difference in terms of progressing, right? So I mean, when we are buying a house from someone else, we're actually solving their problem. We are taking away their headache. So you have to think along that line. And we did a lot of direct marketing to sellers, where we are able to buy at a good price directly from the sellers, and working hard now. We work really hard while I was working W2 job, and that makes that two things makes a lot of difference. Doing things that other people would not do in terms of marketing and finding deals. Second is working harder than everyone else.
James, real quick, push the mic a little bit closer to your mouth, just so we pick you up a little bit. It sounds perfect.
All right, cool, awesome.
But didn't mean to jump in there. You were just talking. You said mindset is super important, and I couldn't agree more. It's been echoed across every single episode that I've had so far. When you get into something like this, especially when you get into the big game, big multifamily properties, 300 plus units, sometimes it's easy to doubt yourself. It's easy to think, who am I to actually get this done? But really, you just got to focus on the goal. You got to say, I'm going to do this. This is going to happen. And don't give up. Just keep going forward.
Yeah. I mean, just to give you an example, once I did all my single family houses, right, I went to my first 45 units, which I found through off market strategy. And we jumped on a call with the seller's agent and myself. And during that, maybe 20 minutes call, and the seller was like, at one point, yeah, he was asking all of us, the other two guys, which is me and his agent, actually, why am I talking to this guy? Why am I selling to this guy? I don't have to sell. And why am I mean, he's asking everyone what. Then the whole room went quiet. Then, yeah, it's just that, if you work hard and if you have a higher mindset, some things will happen without plan, right? So, and
Absolutely.
he sold the deal to me. I mean, end of the day,
It just works out.
it works out exactly.
So it sounds like those the first few units, single family that you got those through direct mail marketing. I mean, when you get into larger multifamily, it's mostly broker side. Do you still do direct marketing, or is that?
Yeah, for my first two, I mean, so out of my 9 deals, 2 of it were from direct marketing. I think 2 or 3 from direct marketing. Out of 2 or 3, even so, after that, I had brokers start calling me. So yeah, the first 2 is actually from direct marketing. So it does work even on multifamily, but not for larger units. I think 50 to 150 units, you still should be able to get deals using direct marketing.
Gotcha. Okay, so you said under 150, direct marketing should still work pretty good. And 150, that's pretty large for
very large.
Many people. Yeah, for sure.
Absolutely.
So do you do any other types of marketing, online, ringless voicemail, text marketing, anything like that? Or is
I do 3-level marketing. One is cold texting.
Okay.
Second is cold calling. Third is direct letter marketing.
And you find direct marketing to be the most effective?
To be the most effective for newbie to get a deal done.
Yep.
Right, because newbies are hard to get started in this market, because most brokers they will listen to you, but they're actually not listening to you, right? So they got a lot of bigger guys to handle with, and they don't want to deal with the newbies. So I think with newbies, to get a decent deal, they have to go through off-market strategy to find a deal that can launch their career. Otherwise, they're going to be paying the highest paying price. So it's very hard for newbie to get started. The barrier to entry is just so high in this commercial real estate.
Absolutely. And on that note, when you do direct marketing, you can negotiate seller financing, which is my favorite thing. That's the benefit of direct marketing.
Yeah.
Awesome. So, you went from 0 to 40 employees. I've enjoyed asking this question. So what is, 40 employees now, you got a lot of people on your team. What were the first few hires that you guys did, and what were those roles? What were like the essential roles that you brought on at the very beginning?
I think most of our employees are people on the properties, like property managers, leasing agents, maintenance, and all that. So the first few people has been property manager, and after that, the second person would be the maintenance guy, right? So these two is critical for any like 100 plus property. And the first 45 units was just a property manager, and we outsourced the maintenance. The second deal, we did 174 units. We did a maintenance lead and the manager, and also the assistant manager. So a few people. And as we grow to the corporate level, we have like 40 people right now. We have hired like regional managers, and we have our own accounting team right now. 3 people working in accounting, and now we have HR, we have marketing officers, we have CFOs and all that on the corporate side.
Perfect. I love it. So now talk about the raising capital side, because that's the other obstacle that a lot of first-time investors, new investors run into, is that they realize, I mean, when you get started, obviously you're going to be using your own money, or you're going to be using maybe friends and family. But once you get into these bigger deals, you need to start raising the capital or taking equity out of your own properties. So how do you go about, say that first large multifamily deal that you did? How did you go about getting the capital in order to take that one down?
Yeah. So what we do is, as we do our deals, we start telling other people about it, and people get excited about it, right? I mean, real estate is a cool thing people get excited about. And I mean, when we go to multifamily, whoever we told about the single family, we also told them that we're going to go into multifamily, and we probably have to raise money from people. And just because of your skill and your track record, even in single family, people are willing to give you money for even for multifamily, right? So you have to talk about it, and you have to tell about your accomplishments. Then you can gain trust from the people. And of course, you don't go and do huge deal on your first deal, right? You do like 50 or 70 units in the beginning. So the number of money you raise is small, and that's once you do very well on the first deal, then you can do well. Then the first group of people will tell a bigger group of people, then you're able to raise big money, right? So do a very good job on your first deal. That's very important, because that's your case study for your life, right? So like my first deal, when I tell you right now 332%, that's a big case study,
Yeah, for
right?
sure.
For the whole life, right?
Take my money, go invest it.
Yeah, it's like who can get 332% in 4 years, right? It's crazy, right? But that is a true case study. And because we worked very hard to find off-market deals, we worked very hard to turn around the property that launched our career to the next level. So doing a good job absolutely is important to raise money. I mean, because people do acknowledge you. Second is you just have to work hard in your first deal, and by doing things, by buying a really good deal, and the only way to do it is you do things that other people don't do.
Absolutely. And I was just jotting notes down
Yeah,
for some highlights that you just, I mean, that was a really good piece of advice that you gave just there. You're saying you got the capital originally was from friends and family, but you didn't go for the big deal. You didn't just jump on them and say, hey, I have this big deal, hire with me. You talk with friends and family over time, let them know that you're investing. You have plans to invest in multifamily. And then when the time came, you have this track record with single family. And then you could take it down. The first multifamily gave you this great case study, this great example of what your potential is in this industry. So now you have something that you can take others. So it's really about track record and just letting people know what you're doing, letting people know. Yep.
Yeah, just being authentic and being truthful to whatever you're doing. Any passive investors, anybody who want to give you money will be able to see you through in the next 5 minutes when they talk to you, whether you are a genuine guy, you are a hardworking guy or not, right? So when you are not doing the real work, people can see this person, well, I do not know whether he knows exactly what is he doing or not, right? So people can feel it, right? Especially all these people with a lot of money, right? They're successful for a reason. They have certain intuition. Right, when they see something, I know whether this guy is a hardworking guy or not. And that's what happened in my first deal. I had like 4 investors in my first deal. We only raised like 430,000, right, on my first deal. And one of them told me that when he hear me about my single family, he went and tell all his family that, hey, this guy, we're going to invest with him when he goes to multifamily, right?
Nice.
And
I
so
love
he's
it.
like, even when I was talking to him, he already said that we are definitely going to invest with him when he goes to multifamily. So the people can see through you very quickly when you talk about your case study on how hard. I mean, you don't have to say I work really hard, but from the stories that you tell, I mean, people can guess whether you are a genuinely hardworking guy or an authentic or not.
Absolutely. Who you are will shine through. And even if no
Yeah.
matter what, you are who you are, and people can see through that, especially people who are ready to give you money.
Yes, correct.
So now let's kind of shift from your story. I want to hear what your take on the current market is. We're in a very unique situation, especially for multifamily. You're seeing compression of cap rates. There are fewer market deals out there. So kind of tell us what's your take on the future of let's just focus on what you do, the future of multifamily investing in your market in the greater United States, let's say over the next 2 years.
So I think multifamily, so there's 2 different play. One is the play on the coastal city. I think multifamily may not be doing as good as what it used to be, like in the coastal cities, because through this pandemic, we see a lot of restriction on landlords, right? I mean, they used to be, all this coastal city, most of the time, they're not landlord friendly. Now it become worse because there's so much of rent control. There's so much of rent forgiveness requests. and so much of request coming. So people are, I mean, there's going to be less landlord friendly activities going to happen in this coastal cities just because they are just not designed for that, right? Whereas a lot more activity is going to happen on like states like Florida, Georgia, and Texas, and probably Phoenix, where they're more landlord friendly. Um, there's a lot more support from the local government for multifamily, and I think there's a lot more people moving to these states, and that can create a cap rate compression because now there's a huge migration happening. Second reason why there could be more cap rate compression is because hotel and retail is doing really bad right now. So all the money in hotel retail is not going to be looking for hotel retail for the next 5 years, I guess, right? They're going to go to, let's put somewhere safe, which is like multifamily. And multifamily is benefiting right now because of the COVID is a shelter in place. And the only shelter is houses, right? So your single family house, your mobile home parks, any affordable housing component like, multifamily, all are doing very well because people are getting help from the government to stay at home right now, right? So I think that's going to continue until end of the year, just because it's an election year, and it is still hard. I mean, there are still people who are not paying our rent, especially people who are not impacted in COVID. They are the one who's not paying in rent. People who are impacted COVID, they're actually being good, and they're being very uh, sad about not being able to pay the rent, and we can understand that. But there's a lot of people who have pay, and they're taking advantage of this whole law that's happening right now. So there are people who are not paying, but they are a smaller amount. We're still seeing good collections right now on our apartments, and hope I think that's going to continue. It's not going to crash as what happening in hotel and retail, but multifamily and industrial and any other affordable housing would continue to do well for the next um, couple of years.
Awesome, I love it. And actually, that was going to be my next question. Do you see any other asset class that you're really that really kind of gets you excited? And so it sounds like industrial, maybe
industrial, multifamily, mobile home park, self storage, and one more thing is called a medical office.
Medical office, interesting.
Yeah, because I think it's just how people scared are. I mean, there's always a revolution happening when something like a black swan effect, like right now, this is a medical issue, right? So there's going to be some beneficiary to that. I think it's going to be one of it's going to be medical office and multifamily.
Awesome. That it makes complete sense to me.
Yeah, and also like mobile home parks and self-storage, all this. I mean, and on top of that, it's industrial, right? But if you look at volume-wise, multifamily is the biggest volume, right? In terms of
because there's more of them.
There's more of it. It's like 30% of the whole 30 or 40% of the whole commercial asset class, multifamily.
Wow, really? I didn't know that.
It's a big industry. That's why you go around, turn around, you see everybody's doing multifamily, right? There's so much of
that's just what there is.
So much of inventory out there, right? So people need to stay in houses, right? And
that makes sense.
Yeah.
Awesome. Well, so I'm going to shift gears one more time. We're going to go towards this is kind of like a lightning round where I'm just going to ask a few quick questions.
Sure.
So just kind of off the cuff. For one, you've been in real estate for a while. I don't know how many years. I didn't write down the date.
6 years. 6 years in real estate.
6 years. Wow, all this in 6 years. That's a great accomplishment. Congratulations.
That's crazy, right? Yeah, thank you. Yeah, I don't say 20, 30 years. I don't know. Some people look very young. How can they be 20, 30 years in real estate? But we don't add the houses that we buy for ourselves we did our own house flippings and all that, but we don't usually add that. 6 years is when we really got started, and it's a continuous timeline, right, with where we are right now.
Awesome. Well, yeah, that is a great accomplishment. So congratulations there.
Thank you.
So the James that was back 6 years ago, going back to that, James, you were just buying your first multifamily. If you could give him one piece of advice going forward in multifamily investing, what would that be?
Buy as bigger as possible. Bigger units as quickly as possible. But we did pretty well. We went from 45 to 174, and after that we start buying 200 plus units. So we did pretty well. But I think just buying, bigger units quicker, it makes a lot of difference. And also buying deals without prepayment penalty would have made a lot of difference right now, because the property, a lot of cap rate is compressed, but we can't sell it because a lot of our deals has a prepayment penalty, which is by design because it's lower risk when the economy turns like this, because a long-term loan. But if I've got a long-term loan without prepayment penalty, that would be a much more awesome thing to do.
Interesting. You're the first person to say that piece of advice, so I like that. No prepayment penalty. That's good to know. So next question, we all get our information somewhere. A lot of it times it's from books. So give us your number one book recommendation for business/real estate, and then non-business.
Business/real estate. Of course, go and get my book in Amazon.
There you go. There you go.
Okay, I'll talk about my book in a short while. So other than that, my number one book in real estate, maybe the One Thing by Gary Keller is a really powerful book.
Oh yeah.
That's a real estate plus business. Non-real estate business, I would say Think and Grow Rich. So the mindset book.
I love it. And yeah, tell us about your book.
My book, okay. So my book is a best-selling book, rated top 15 real estate book by Jim Cramer, The Street. It's called Passive Investing in Commercial Real Estate: The Insider Secrets to Financial Independence. So to get that, right now we are giving out a free book offer right now. You go to passiveinvestinginrealestate.com, passiveinvestinginrealestate.com, and you can get the book for free. There's a $3.95 processing fee, but that's pretty small compared to the value you get. We already sold like 2,000 copies, paid copies. I'm not even counting the one I give to to some of my friends and meetup attendees, but the paid copies more than 2,000 copies, and we launched it like 1 year ago. Yeah, that's got a lot of reviews on that book. It's on Amazon as well.
Perfect. So passiveinvestinginrealestate.com is where you can get that book. Sounds like James is giving that out for free with a little with shipping and handling or processing or whatever the fee is.
Yeah.
So go there, pick that up. Sounds like it's a great book. I haven't had the opportunity to read it yet, but I may have to jump on it myself.
Yeah, sure.
So, I just lost my train of thought. Oh, there we go. You've given us a lot on the show so far, and so a lot of wisdom. But you need to receive as well. So if somebody watching the show wanted to give you something, a lead, a shout out, anything, what would you want to receive?
Well, just connect and talk to me, right? So if you guys are interested in commercial real estate, passive investing, or even active investing, I do have my own mentoring program for active investors because we are vertically integrated. So, but to get hold of me, are we going to go to how to get in touch with me?
Yep. Next question.
So my website is achieveinvestmentgroup.com. Achieve is like achieving a goal. And my email is james@achieveinvestmentgroup.com, right? So I also have a Facebook group called Multifamily Investors Group. There's like almost 5,500 people. I think 5,600 people right now. I'm very active there, and just connect with me through these channels.
Perfect. I love it. So that was James@achieveinvestmentgroup.com, or you can just go to Achieve Investment Group to get in contact with James. I'm also going to put his LinkedIn link in the show notes. So if you want to get in contact with him, you can click through there. So again, James, thank you very much for coming on the show. I enjoyed it. I'm sure everybody listening and watching did as well. For everybody watching, thank you guys for hopping on here. And again, the best way to support the show is just subscribe, like, and share. We look forward to seeing you guys on the next episode.
Awesome. Thank you.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.